awesome setup, a failed breakdown that I constantly harp on. So I want to go over that today with you. I want to start off first by saying white lines are major levels. These are levels that are constantly changing a little bit, to be precise, to where most of the price action occurs around. They're based off the action from today, yesterday, the past week, whatever range we're in, whatever area we're in. Sometimes when we come to an area that we haven't been around for months, I have to go back uh, to earlier price action from a year or two ago, if not more, to see what levels were expected back then. And I've proven over time on my channel that those levels get action once again when we get to that area. So white levels are major levels. That's where I'm looking for my main setups. When they occur around the major levels, that gives me more confidence to take the setups. Blue levels are like white levels, but they're very sparingly used. They're macro levels that for sure are at least months away from the past, if not actually usually years. So a lot of these blue levels, we haven't been in this price range probably since 2022, if not earlier, I believe. So some of these blue levels are from 2, 3 years ago. Those are macro levels. Those are areas where I found price action to either sell from, take off from, back test, etc. And you can even see when we came to this price, this blue level right here, we consolidated around it a couple times before taking off and setting the high for the month. Orange levels are just usually minor levels, levels that aren't as important. I'm adjusting these levels almost daily, if not daily, usually, to be precise. Even if I don't adjust them daily, I can make a little adjustments and they'll still be fairly good. With that said, uh, I just want to show you the failed breakdown that occurred. I'm going to show you, break it down on how to approach it, why to approach it the way I did, and we'll go from there. So in the last video, real quick, I had the first setup being a failed breakdown of this low right here, and I said that we were consolidating right below that entry. The entry would have been right around this minor level, this orange level, so around 1300, almost if you round up. We tagged it once, which is great, at 115. That shows that it triggered a little bit. Now you want to see accept below ideally before pushing through if you want to take that long. That did not happen, and we actually sold on tariff news, which is great. Volatility is more than welcome. That's what I'm looking for. And I want to break down now why this was a setup. So as I mentioned earlier, we're looking for lows to get taken out and then get back above the low. So essentially what I was looking for here was price got below this low right here. It consolidated below and then I wanted to push up. That didn't happen, but we got one fail breakdown down here. So see these three lows? This is what I would call a cluster of lows. Typically, I'm looking for a singular low like this one right here. However, if we got a cluster, that's totally fine. What I would approach this is I would probably want it to clear the whole area ideally, just to be safe and not get trapped by only clearing one. So the best setup will be if price went below these lows and maybe tagged a minor level below before reclaiming above around the green price. And guess what? That's exactly what happened here. Now I'm going to go to a 15 minutes to show you how that happens. And honestly, I want to show you in 5 minutes today, only to show you educationally, because otherwise it's not always going to be like this. Now, what price did, and actually, let me just go to a 1 minute chart here. I really want to show you how price usually behaves. So we lost that cluster of lows around 741. We went below the cluster of lows. Let me just give me 1 second here. I'm going to identify the exact low for you guys. And this is a great lesson on why you have to be patient with setups. You don't want to rush in. You want acceptance. You want the price to go through your entry and then pull back ideally before taking it along, because you might get trapped before the initial takeoff. So here we go. So we lost those cluster of lows around 741. We pushed through the trigger at 742. If you rush to take this without waiting for acceptance, you're gonna get trapped. And price action, the institutions knew that. So look what they did. The algo or whatever we're trading against, triggered the failed breakdown, pushed back down. Your stop loss would have been below this low, and you would have gotten stomped out. Now, If you waited, you would have seen that we came down and tagged this minor level, which would have gave you some confluence before pushing back up, and we went right back through the trigger again at 747, consolidated there for a minute or two, and then started taking off. So when would I enter? I would probably enter around 748, 747, knowing that we triggered once, we trapped people again, and then we pushed right back to that trigger, went through it, sold back down a little bit, and then started pushing back up. Easy as that. That is an absolute awesome fail breakdown. And if you missed it, there was a second entry provider right here where price action pushed back down, gave you a couple hammers on the zone right here before it started pushing back up. So you would have probably entered around 803 as you started getting back up above the trigger. Simply put, this is a great fail breakdown. This is exactly what I'm looking for. I want to see price lose a low, come back, push through the trigger, except by going back down, selling, and then going back up. The only thing that I would have preferred, but you can't make those choices, is after pushing through the trigger, I would have preferred it did not go below the initial low, and I would have enjoyed it if it stayed right here, because then you could start entering possibly even a little lower, maybe around this white line. But regardless of that, because it went down lower, I wanted to wait for it to really clear above, at least 3 or 4 points above those lows that I mentioned earlier. And that's it. This is how it looks on a 1 minute. On a 15 minute, you're not going to see that. So you're going to have to understand that the price went above your trigger and came back down, and just go with that. So hope that helps. I really think this is a great video to understand what's going on. Right now, I took that position over here, sold most of my position. I have a little bit of a runner left. I don't know what's going to happen. My guess is because of the tariff news, we might continue to sell. And let me see where I would potentially look for another long. And FYI, we're pretty close to the middle of that bull flag right now. I do think we should be able to tag it. If I had to give you a guess, I would say around 1175 could provide a good bounce, just because you can see it was a strong support, and we took off from there for the high of the recent highs. Otherwise, if we don't hold here, I'm looking for a failed breakdown of this clear low right here at some point. Those would be two good options. So here I'm looking for a dip in recovery. Maybe price goes down below this level, maybe tags this a little bit before going back up. Otherwise, the ideal setup will be a failed breakdown of this. If those don't hold, then I could see us coming back down and testing this macro level, setting up a failed breakdown at this low. Otherwise, touching the support of the bull flag we've discussed. Good luck, guys.